Okay, good afternoon all. So it was a very engaging conversation we had earlier. So we have to keep up the tempo and the momentum because right after this we have Rohit coming in from Temasek, going to be another interesting session. So let's get started. So in preparation of this panel, I was trying to do a face-off between ChatGPT and Gemini to figure out, one interesting number I was looking for. And unfortunately, both of them gave very conflicting answers. The question I wanted to find out was, what is the current AUM, asset under management, globally, and how much it has actually grown? So both gave conflicting answers. And then I have to fall back on the most reliable source for data, which happens to be Bloomberg. And what I realized that currently the global AUM stands at $120 trillion. And in 2016, it was around 85 trillion. So essentially, we have seen a growth of almost $35 trillion asset under management has grown. And the reason why I was actually looking for this in preparation of this session was, I was trying to see how this 35 trillion extra asset under management will be absorbed. So I looked at the other side, on the supply side, how many new shares or the IPOs has actually come out. And at best, when I looked at the top 5 IPOs in last 5 years, when I added, it was around $100 billion. Let's stretch the imagination to 1 trillion. Still, we come to 1 trillion. More 2 trillion, but still we'll never be able to catch up with the 35 trillion of extra assets, which has come into the system. And the McKinsey report says that, unlocking of balance sheet in the banks, high net worth individuals and insurance is going to add another 10 trillion in next 1 decade. So the challenge over there is you have growing demand side is going up, but on the supply side of the new shares coming in is not going. So the impact is that every time we thought the valuations are stretched, it goes to the next level and it will continue to grow. And the supply side is what you guys control as the VCs, because you are the one who nurture, you invest and nurture the next phase of companies which are going to come out into the markets, which the asset under management or the fund managers are going to invest on. So we thought we will do this session to really get an insight as to what you are seeing, where the next set of companies and the industries are going to come into the market we should be paying attention to. And that will be part of our conversation today. So Gitali, let me start with you. Last few years, we see we had blockchain, cryptocurrency, metaverse, then now AI. So a lot of startups are coming in this space, okay? From your perspective, when you look at the startups you meet, are there any interesting industries in which the startups are doing great work, deep work, which will have meaningful companies set up, which may come out with the IPOs for the future? How do you see that? And then I'll come to Paul with the same answer. So let's get some insight from your perspective.
Okay, sure, Nitin. Thanks, first of all, for having me. And maybe it helps to give a little bit of background on IFC so you can understand how we look at investments. So the IFC is part of the World Bank Group, and we essentially invest exclusively in private companies in emerging markets. We deploy about $40–50 billion of capital every year, mainly through our sort of more mainstream private equity and debt financing items. So where I sit in the IFC is in the venture capital team, which really sort of spots, as you said, early signs of trends or companies or startups before it becomes interesting for our sort of more mainstream private equity and debt business. So this team was really set up to spot early trends and early signs of things that are coming up, which are technologically driven. So it has to have a technological sort of aspect to it. So what have we recently seen, right? I mean, we are pretty sector agnostic in that sense. We've done everything from consumer internet to enterprise tech to, health tech, ed tech. And there's a lot of development even within these own sort of segments, which are very large segments. But on a more recent note, we've seen a large amount of things happening on the enterprise tech particularly, and on the climate tech side. So for IFC, even though we are a VC team, we are part of this larger organization where we think of these sectors as how can we sort of establish the sector as a whole and grow the sector as a whole. So let me take the example of AI, right? I mean, everyone is talking about AI. You just talked about ChatGPT. This is obviously going to be a large part of the growth in the coming years. I mean, AI will soon become the same as, any company having an app. It's going to become omnipresent everywhere. So what can we do as an organization, right? So we've already spent about $500 million on data centers, for instance. We've spent things on traditional industries like data fiber. But then we are going to the next level of saying, okay, can we apply this to healthcare? Can we apply this to agriculture? Can we apply this to education? So one of the more recent investments we're doing right now is in a health tech company, which is actually an Indian company, but we have customers in the US and now sort of expanding into Latin America with our capital. And what they're doing is essentially bringing together the healthcare industry, which is kind of intermediated in a lot of ways. They don't talk to each other. So the pharma industry is on its own, the insurance industry is on its own, the whole hospital network is on its own. So this company is essentially putting together all this data onto one platform so that all these different parties can talk to each other. So yeah, that's just one of the things we're looking at.
So enterprise using AI is a broader theme which you see is kind of emerging. And Paul, let me move to you. So what do you see?
Yeah, well, again, also thank you for having me today. So again, just a little about ourselves. We're early stage investors. We've been around the region the last 12 years. We've invested in more than 200 companies. And most of what we invest in is what we call enterprise, deep tech, and sustainability. So enterprise means we do mostly B2B, whether it be SME focused or large enterprise focused. When we say, deep tech means we take technology risk. It can be fancy AI, hardware, biotech, etc. And then when we say sustainability, it's not just climate, it's all of the UNDP Sustainable Development Goals. And typically these are very relevant in emerging markets. So since we invest mostly in Southeast Asia, maybe I'll give you two flavors, right? So one might be a more emerging market flavor, and then the other will be from Singapore for the world. So for emerging markets, one of the companies we're really excited about is a company called Lupa in the Philippines. In fact, IFC is a co-investor in that. And what do? They're trying to solve the low-cost housing problem in the Philippines. So not too many people know a low-cost house in the Philippines is about $10,000 to $30,000. And the backlog in the Philippines is about 6 million, which affects about 20% of the population of about 120 million people in the Philippines. And people might think, it's maybe because these people can't afford these houses, that's why they're not being built. It's actually not that. It's people can pay, people can buy these houses. The real estate industry doesn't want to build them. Why? Because it's not enough money, right? You would rather go through the pain of building and selling a $500,000 house or $1 million house and make the money, rather than try to figure out how to make money from $10,000 to $30,000, right? And so what this company has done is basically figured out how to orchestrate the whole process in a way that makes money. So from identifying the property, buying the property through a network of brokers, refurbishing or building, and then eventually selling. And they do this better than anybody else. And the business, when we invested, they were doing about $4 million in revenue. After a year, they got to 7, they got to 13. This year, we're going to go to about 30 mil. Next year, we hope to do 2.5, 3 times. And it's always positive EBITDA, right? But how is this possible, right? People will shy away from this, saying, "Oh, you have to buy the land. Why are you going to do this?" But what I'm trying to say is, it's very rare to have markets where the demand side is really unmet, right? And so all you need to do is figure out how to deliver the supply efficiently. And we're doing it better than even the largest real estate company in the Philippines, Ayala Land. Right? Not too many people know 15% of construction costs by law in the Philippines have to be allocated to solve this low-cost housing problem. And you can invest this, make money, and take it back. Most of the real estate developers would rather just pay the fine. And Ayala tried to do this themselves, and they basically tapped out and said, you know what, we have these 400 properties that we've built. We're having a hard time selling. They gave it to Lupa. 2 months, we sold it. So we're quite excited about this business, and we think this can be replicated globally. The other side is we do AI. It's something we invested in 2015 when nobody was investing in AI. And no, it's not Gen AI. It's AI applied to anti-money laundering. Right? So not too many people know the fines banks pay for getting caught, being complicit with money laundering are in the billions, not hundreds of millions of dollars. And this is a startup out of Singapore and Poland that got its break here because StanChart had an innovation center here. They gave them a break. And if you've ever sold anything to a bank, how difficult is that? Try selling something to a bank when it's mission critical, and try selling something to a bank when you're a startup from Singapore and Poland. So the problem was that big and that urgent, and the technology was that promising. Long story short, it's probably the global leader right now. We're accumulating logos. HSBC and StanChart are clients globally, and they're also investors in the company. But nobody would have expected a startup like that coming from Singapore or Southeast Asia. So instead of thinking about it like themes, because we're very early, we're looking for the disruptors, we kind of go bottom up. And I could tell you stories all day long, but there's a lot of stuff in this region that I think is ready to become really interesting businesses. And I guess my invitation to the audience is start learning about what these interesting models are, because hopefully we also need our exits. We hope to be able to bring them to the public markets at some point.
So they are looking for the exits because that's where they are able to invest when it gets listed on the exchange. If I have to just summarize, very interesting, both of you touched upon two of the most interesting things I always feel, that for every human being, the three biggest expenses have been education, housing, and taxes. Taxes, we can't do much, but if you see the cost of housing and cost of education keep going up. So I always used to wonder why technology disruption is not coming to cut down the cost. We managed to bring down the delivery to 10 minutes. I can live with 30-minute delivery, but I can't live with the high cost of housing and health. So I'm glad that there are startups who are focusing on this, and that was the whole purpose, is to really figure out over and above the normal things which we look at where the work is actually happening. So just segue from there, Paul. Let me start with you again here. Is, in the listed markets, it's quite easy to evaluate company because a lot of information is easily available, okay? And what are the markers you look at when you have to evaluate so that, when they are looking at companies which are, about to come and information is not easily available, so they could actually use those markers? What will be those?
Right. So I guess it's different from when we invest to the time, I guess they become more ripe, right? So when we invest, it's very early. We're typically the first institutional investors, right? And why do LPs give us money? They're looking for alpha. They're looking for us to take risks other people won't take to try to build these big businesses. So what do you need to build a big business? You need a really good team. You need a really big market opportunity. You need an industry or technology insight not too many people have, so you don't have too many competitors. You need to have a really good business model. Hopefully it's capital efficient. And then ultimately you need to execute, right? I guess that's pretty obvious to everybody, but what it will take is 10 years or so of this continuous execution. I guess what would be important for the public equity investors is, I think, a level of curiosity, right? Because it's very easy to be seduced by big numbers, right? And if you don't pay attention to what's coming down the pipe, then you will end up investing in what everybody else is investing. The fun part of our job is to find these hidden gems and see them grow. And we're always looking for dialogue with the public equity investors also, because we'd like to make sure that the companies that are coming are things that they will begin to understand. Why? Because things like Lupa or Silent Lake, like I mentioned earlier, might not look like things that are already in the public markets, right? And so I think the opportunity is to kind of identify, get comfortable with, understand these new emerging businesses or business models that they can get a head start on.
Thank you. Geetali?
I think in addition to everything that Paul said, one big learning we've had is that you can't just copy-paste a model from the developed market to the developing market. And I think what we've seen is a classic case of an example is a company called Eve Fishery in Indonesia that, Paul is also invested in, we also invested in. And what they essentially did is, they took more than 100,000 fish farmers, provided them with an IoT product, which kind of gave them analysis and data on demand, supply, feed related information so that these fish farmers could improve productivity of their fish ponds, right? And eventually over time, they started to take the offtake of that fish. And now almost 50% of that fish is actually quality standard graded and certified in order to export abroad to like Europe and other countries, which, as you know, has very high standards of import. And the rest of it is domestically consumed. And this is really a one of its kind company. Like if you try to find a benchmark to this or a comp analysis to this, you would rarely be able to find another example of this. So I think that's also one of the things we look for is what is this problem really solving? What is the problem that they're solving, the company, right? Is this really disrupting the way things work? Is there going to be a market for this? And can we as investors come in and sort of help solve this problem? So I think also to Paul's point, keep your mind open to these kind of models. I mean, hopefully, eventually, we're going to bring this company to an IPO soon. And so we'd love to see how the public market reacts to something like this.
If I can double click on this company, we invested in this in 2018, right? They were about 2 million in revenue. This year, we're tracking to about $1 billion with about 5% EBITDA, which is not normal for startups here. And the goal is to be IPO ready by 2026. So we're exploring exchanges right now. And we took the founder on a tour of Australia, for example, and we met public equity investors. And this is what I meant earlier, where they don't quite know how to bucket us. They don't quite know how to define us. And some of the investors that we met admitted in the end, after they heard the story and they found it quite compelling, so, I came into this meeting with very low expectations. I didn't know how to think about you guys. Are you a fish company? Are you a tech company? Are you a distribution company? How do we value you? Yeah. But after they hear the story, now they're curious. Now they want to come to Indonesia. Now they want to understand. That's the kind of dialogue we'd love to have with the public market investors, to kind of just show them what's coming up and hopefully they can find alpha by being curious.
Yeah. No, I think so. We have like 2 minutes left for the conversation. So the way I like to summarize the conversation we had so far is, one, from the public market perspective, to have the curiosity. And the curiosity should go beyond the obvious industries which everybody talks about, and not go by the trend, but really go by the companies which are doing very strong fundamental business at the fundamental level, and to have more dialogue. Okay? And it is very difficult to, as you rightly said, Geetali, that you cannot bucket companies. There's no peer comparison which we could actually look at. So in the listed market, we always, first thing we do is we look at the peer comparison to see how. And in these cases, in most of the time, you don't have that. Like 2015, you talk about the AI for money laundering, no peer, So that's why I think the listed companies, also the people who manage the public markets or invest in public markets, also need to change their approach, how they're going to look at the unlisted or the startup market. I think what is required is more conversation, and we need to get the exchanges also involved because they are the platform through which they go. And we need to have more conversations like this, so that we are able to bring the promoters of this kind of companies and get them exposed, to the people who are going to ask difficult questions when they actually meet for their quarterly earnings. So it's not that easy to be a listed companies. Okay, so I think in the given 20 minutes we managed to cover very interesting, points, how to look at the unlisted markets, what are the markets, and what are the trends which are emerging. We could have gone more, but I think the next session we are going to pass on to my colleague Haslinda on another interesting conversation on the geopolitics. But for now, I would like to thank you for sharing your thoughts and insight as to what's happening on the other side of the listed markets. Thank you, guys.
Thank you.